caution of weighing this 1 month reading too heavily, because there are a number of factors that affected some of it, of course. But jobs and inflation are in the spotlight here this week, as many are starting to kind of question what the Fed's path ahead may be. So we have a lot to cover here this week. I'm Brandon Steele, financial advisor with Mainsail Financial Group here in Bellevue. And our goal is to leave you feeling more empowered each week as we kind of share some of these updates around markets and data and economy every Thursday. So basically, there's a couple of things to highlight here this week, which all really tie into the Fed decision and press conference that's coming on Wednesday. Both around jobs and inflation are going to be kind of the key themes. Let's start with the jobs side of things. So basically, last Friday, we did finish up jobs week, and we had the unemployment and the employment report come out on Friday. I'm going to focus on the employment report, which shows that we lost 92,000 jobs. I was going to say added minus 92,000. We lost 92,000 jobs for the month of February. What I want to highlight is that this does mark the first time for the recent year now where we've seen a few of these lost jobs reports. So, it is interesting to watch this trend. It's something we really want to pay close attention to, which will tie into, what we'll cover around the Fed coming up next week. But I do want to share that keep in mind that the healthcare was a big part of this with a strike in Kaiser Permanente. And also weather did have a big impact as well, with a tough month of February, especially on the East Coast and through a big portion of the country. So I do want to share that this is important to watch. It's going to be a big factor, the labor market, in the Fed's conversations ahead. But I do want to also share, that this one data point is important to watch. Do not ignore it. It's important to watch and pay close attention to. But I think I want to caution of weighing this 1 month reading too heavily, because there are a number of factors that affected some of it, of course. But also, even just generally weighing 1 month is a challenge to say the least. But again, there were some factors too. So I don't want to downplay it. I think it's important to watch. It's an important data point to not overlook. But I would caution of weighing it too heavily and kind of making some assumptions of where things are going based on this one data point. Okay. The other thing I do want to touch on just briefly before inflation is existing home sales came out as well. Did surprise to the upside a bit. So in a way, a good number there. And then we also had inflation come out just yesterday on Wednesday. This was CPI data. The headline number was up 0.3%, which is generally in line with expectations. Core was up 0.2%. Again, also generally in line with expectations. So not a whole lot to work through here. For those keeping score at home, this does put the year over year at 2.4% and 2.5% respectively. So again, 2.4 on the headline, 2.5% on the core, right? Coming up next week, we have a lot. So tomorrow we get GDP revision, income, spending, job openings, and some inflation data as well. All of that ahead of the Fed decision that comes on Wednesday. So a lot coming up that could really shape some things, especially for the Fed, but in the markets as well. And so what I wanted to cover for our question of the week is what all this means for the Fed's path ahead. And the reason I think this is important is because we're starting to hear some folks suggesting that maybe rates actually may not cut this year, although the general consensus has been 25 basis point cuts. That is starting to shift a bit. And I would say I understand and see why that may be the case. I wouldn't necessarily hang my hat on a no-cut 2026, but I think there are some signs that we may see the Fed just kind of hold their ground a little bit longer anyway. And what I would share is that I think the big thing to watch to really get that temperature check is the labor market. I mentioned the employment report, of course, spent some time there. And inflation is kind of doing its thing. Inflation could pick up as a result of some of the tensions in Iran, so we need to watch that carefully. Obviously, oil prices has spiked, so if you look at the headline, we'll see that carry through at some point. But that is a big one to watch. The inflation is going to, again, I don't think we're going to see much surprise there. If anything, we might see an upside surprise because of the tensions. But, I think it's still going to remain sticky, for some time. But the labor market is where we saw some strength for a while. And now we're, maybe seeing a little bit of a crack here for February. And so I don't want to say that means bad things. I just mean that there's a bit of a discrepancy there, and it's going to be important to watch how that trend plays out over the coming months. That may ultimately be the key driver in some of those Fed decisions ahead. So I hope that's helpful. Again, a ton to cover this week and a ton to gear up for next week, but be sure to tune in next Thursday. Again, we're going to cover GDP revision, income, spending, jobs, inflation, and the Fed meeting and press conference that follows. In the meantime, have a great upcoming weekend, and we'll see you next Thursday at 3.